Welcome to the ICAEW Insights In Focus podcast.
Hello and welcome to this ICAEW In Focus podcast on COP26. I'm Richard Spencer and I'm the Director of Sustainability at ICAEW. Now, we've heard a lot about COP26 in the run-up to the climate change conference and since, and this was held in the first 2 weeks of November in Glasgow. COP is the Conference of Parties, the governments of all UN members, to the United Nations Framework Convention on Climate Change. This was first adopted in 1992 and entered into force in 1994, so it's been around for quite a while. And for nearly 30 years, governments have been meeting almost every year to solve this problem. And in that time, climate change has got worse and become what's called an existential crisis. Just reflecting back on the last couple of years, which one of us has not experienced the impacts of climate change in their personal lives, in their businesses, through their families and friends, or just even watching the news? It's been almost biblical in drought, flood, famine, fire and pestilence. Most of us were probably unaware of COP until the Paris meeting in 2015. Now, why was Paris important? It was important because everyone agreed to work together to limit global warming to well below 2 degrees increase and to aim for the magic 1.5 degrees. Also to adapt to the impacts of climate change and to make the money, the iconic 100 billion a year, available to deliver these goals. This was the Paris Agreement. So 1.5 degrees has become something of a mantra. And it's important to remember, however, that even at that amount of warming, life will become a lot harsher for all of us. The Paris Agreement set out that every 5 years, countries would set out increasingly ambitious targets to act on climate change, and Glasgow was the first such milestone. In this podcast, we're going to explore what happened at Glasgow and what does it mean for business and the accountancy profession. So to do that, we've got a wonderful panel of guests lined up. Kate Levick is the Associate Director at the leading climate change think tank E3G, where she leads their activities on sustainable finance. She's responsible for overseeing E3G's work on public and private finance, including systemic financial reform, and she's a veteran of many COP meetings. We've also got Mark Goff, the Chief Executive Officer of Capitals Coalition, a collaboration of businesses and other organisations from across the global economy focused on embedding social, human and natural capital into organisational decision-making. And finally, I have Jessica Friis, the Executive Chairman of Accounting for Sustainability. Established by His Royal Highness the Prince of Wales in 2004, its aim is to transform finance to make sustainable business as usual. Welcome to you all. So, what's the verdict on COP? Let's start there. Was it more than we expected but less than we hoped for? At least in the UK, COP has been in the headlines like never before and raised expectations. With 1.5 degrees becoming an iconic number, we fell far short of that at the end, to the dismay of many, including business and civil society alike. Kate, was COP a failure or was it a step forward?
I'd definitely say that COP was a step forward. I think if we look back to what seems a very long time ago now, to COP25, I think where we have come to since then, we've come a very, very long way and made achievements in lots of areas, but there's still a long way to go. You mentioned the importance of that 1.5 target. I think there was a feeling coming out of COP26 that 1.5 is still in sight, but only just, and that we still need to really push up ambition and delivery to get there. But we saw a lot of other important outcomes coming out of COP26 too. We saw really clear signals around the end of coal as a fuel and the beginnings of signals around the end of other fossil fuels. We did see progress made on that very difficult 100 billion issue that you mentioned, but we also saw signs that the world's leaders are really starting to think bigger and think in the trillions and how to mobilise really serious finance at scale.
If you could pick 3 big things that happened at COP where you thought, yes, what would they be?
So I think, first of all, I would pick the Finance Day. Obviously, I'm a little biased because that's my focus. But we started off this COP unusually with a summit of world leaders beginning and kicking the whole event off and making a lot of very important announcements, including new commitments on finance and emissions reduction ambition. But then we moved straight to the finance ministers in the first week. And again, that was a really big day for announcements. For those in the UK, they'll have seen Rishi Sunak standing up and talking about the amount of private sector capital that's now committed to net zero targets, and also talking about new requirements in the UK for firms, both financial firms and listed companies, to make firm level transition plans and disclose those by 2023. So a lot coming through from that. I think if we then zoom through to the end of the conference, the fact that, an agreement was achieved, that we took forward some of these very important steps. There was a bit of controversy at the end about exact language around coal, but I don't think that should disguise the fact that getting a Paris rulebook in place to really take forward the action that was agreed at Paris is a huge achievement.
Yeah, the rule book's a big deal, isn't it? It sort of comes across as, oh, well, it's just the rules of the game. But actually, it's an important step, isn't it?
It's very important. And, one way to think about it is it actually sets rules for countries in the way that countries are very keen to make rules for companies and for the private sector, but somewhat less keen to agree similar kinds of rules for themselves.
So just picking up on that bit, I think this COP was interesting, Mark, because we saw finance ministers rather than environment ministers, and we saw a lot of businesses there, which was really heartwarming. They're out in force, making a lot of commitments and being very inspiring. On the other hand, we had a lot of civil society groups crying foul and, the famous blah, 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 and people talking about undue influence and lobbying. From a business perspective, were there reasons to be cheerful? And were they the right reasons to be cheerful?
Definitely there were reasons to be cheerful, I think. And one of the things I picked up in the first week when we were there was a lot of talk about the risks and the challenges that we faced. By the middle weekend, because remember this runs over 2 weeks, there were several conversations I kept on picking up in the corridors of people saying, I heard you say that, and actually I think I might have part of the solution. So actually businesses started actually coming up with ideas themselves and actually driving some of the change themselves. And that was very promising to see that actually, on the panels, someone would say, well, I heard JCB say that they had this that they were doing. Well, if we did this as well, that would really help. So there was a lot of trading and deals going on as well, actually creating new business. We've got to hold in mind while we're doing it, it can't just become a trading fest where everyone works together. I think the other thing is we're part of Business for Nature, which has brought together lots of different organizations that are trying to make sure that the agenda is actually very much comprehensive and more systemic. And one of the really promising things for me out of this COP was that it wasn't just about climate this time. We could see that it was an equitable, nature positive and climate neutral agenda. And actually, when you look at the nationally determined contributions from different countries, 92% of them actually included nature very clearly in it as part of the solution. So actually seeing it nature-based solutions as being part of that answer rather than just technological solutions, I think was a massive step to the maturity of the conversation that's been going on.
That's very interesting. And picking first up on the trade piece, which I think is interesting, is that the Chinese government and the Indian government kind of resistance to COPs in the past were that they said, well, you've just outsourced all your production to us and now you're measuring emissions in terms of production. So hang on, these are really trade talks. You should have these at the World Trade Organization. We shouldn't be having these here. And that sort of poses this opposition of trade and climate as an either. Do you think we're seeing the narratives come together in a productive way, or are we just hiding behind one?
I mean, there is a big challenge here. We've got several different COPs, for example. We've got a biodiversity one coming up next year, which is going to be very important. And why is that separate from the climate one? Because actually all of these issues are interconnected. And I think you're right, the trade issue is brought up. I was at an event one evening at the Export Finance group, and in there some really big statements about actually not investing anymore in carbon fuels, etc. And you could see with several other countries, the UK started this, but several other countries, including the European Union, saying they've got announcements coming as well. The audience was mainly made up of oil and gas professionals. And they were saying, but we're making money for you. We're making money for you when you do this. Of course you want to invest in us. And they were saying it's more than money. It's actually about what we want to leave. It's about the value that we're creating here. So seeing those things, the trade was coming into the conversation, but it's a complexity that we have to get hold of, and we shouldn't be scared of that complexity. Actually, we don't want to simplify things down. What we should be doing is understanding that complexity and then trying to work our way through it. We're very good as human beings to deal with complexity. This complexity between these issues, we need to see it as a system.
So that's a really interesting point, because you have these different COPs to kind of give you a focus, but you need then to integrate that thinking across it. Do you think that really authentically people, we're talking about nature, we're talking about climate, but do you think business is really authentically talking about the human dimension to this, the social inequalities that are being driven. Do you think that it's a really big issue for business? They're going to focus on the inequalities as well, or is it just going to be solve the climate problem and let the poor pay for it?
There are lots of leading businesses who are focusing on the social and human capital elements of it. The Securities and Exchange Commission in the US is doing a lot at the moment thinking around human capital. Is it integrated? No, it isn't at the moment. I think there's a lot further we need to go, and we've just united in the last year or so the natural, social and human capital communities, but we are finding it challenging to actually have a conversation that encapsulates all of that together. So I think there are challenges. That doesn't mean that activities aren't actually occurring, but are we seeing it as a whole? I would say there's still a lot further to go with that.
So, Jessica, I mean, you have quite an unusual position in that you represent a voice that stretches across the accountancy profession, but also captures the finance profession as well. And you have that impartiality being an independent organisation. What's your sense of the role that the profession has to play here? And I was struck last week with the Edelman Trust Barometer on institutional investors came out. And the headline for me was that while investors are increasingly focusing on ESG issues, and that's environment, social and governance issues, which for me are interchangeable with sustainability issues. It's just a soup of acronyms here, I'm afraid. But do you think that the point is that they want more of that, but they don't trust the goals or the reporting that they're getting from companies? Do you think that's true? And what do you think the profession can do about this?
So one of the really important things with a conference like the COP26 conference is that it really mobilises a lot of organisations, not just governments, but also the private sector, investors, and indeed civil society, to really use it as a way of building momentum. So what you saw in the build-up to COP was a lot of organisations making their own net zero commitments, including the accounting profession. So we work with the global accounting profession, and of course ICAEW is one of the members of our accounting bodies network, and they came together to make their own net zero commitment and really think about the role that the accounting community can play in supporting within businesses and in that advisory role that accountants really play. And I think that the profession during Finance Day, particularly, coming back to the point that Kate was making, I think you saw some really key announcements that talk to that question of how the profession can really address some of the concerns that also came out of COP. So 3 big announcements during Finance Day, which I think are hugely relevant. The first, as Kate mentioned, was this 130 trillion from the finance community committed to net zero. That's a huge amount of money. If I think of the work that we've done at Accounting for Sustainability over the years, 10 years ago, it was companies really getting very frustrated that their investors weren't asking any sensible questions about how something like climate or indeed some of the social or other environmental issues were really relevant from a business perspective. That has absolutely flipped. And I think that headline number is a really good signal of that change. So companies are being asked now by their investors much tougher questions than they have even, a couple of years ago. So that is really important. The second was the announcement from the IFRS Foundation, the International Financial Reporting Standard Setting Global Body, that they are establishing an international sustainability standards board. Now, of course, for the accounting community, this is really important. Everyone for a very long time has been working towards global standards to account for whether it's climate-related issues or other sustainability-related issues, and really thinking about how that needs to sit at the heart of the finance architecture, the finance reporting world, because we know that a lot of these issues are financial in nature. They have financial consequences. And so really having the right information at our fingertips for the company themselves in terms of their decision making, setting a target and being able to track progress, that's of course the kind of thing that accountants are very good at. Making sure that information is robust, that it's got the right controls around it, that it does flow through and inform things like budgeting decisions, that you can understand the different impacts of the different decisions that you're making, not just in terms of the financials, but also then in terms of the goals that you might be setting around climate, around some of those human capital dimensions. How are you making sure you've got the right talent, the right people? How are you impacting and involving the communities in the areas you work? Really important questions. And accountants can play a key role. I think accountants can also help to balance those decisions and act as almost that integrating function within an organisation. The other thing that is really key, of course, with the International Sustainability Standards Board establishment is that it provides a framework for comparability. And that's one of the things that investors keep on coming back to. They want to be able to have more comparable information across organisations to inform their investment decisions. And another area that accountants really come in. One of the other big themes during COP was greenwashing. So are some of these commitments real? How much do they really stack up? So people are saying net zero here, net zero there, but are they actually taking actions, taking decisions that are going to realise those goals? Or are they just making some big headline statements and then carrying on with business as usual? And that's one of the third key announcement during that finance day that I think is worth touching on. And this is around transition plans. And Kate, I'm sure that that's something that you can share more detail on. You mentioned it very briefly, but this is a key thing that the investor community have been asking for, and that the UK have said that they are going to require organisations to be putting in place. And that's that question of, okay, so you've made a really ambitious target. What steps are you taking to make sure that you are putting investment where it's needed to be delivering on it? How are you working with others? I think that collaboration is key, because it's all about your value chain and how do you shift. And no one organisation can do this on their own. So it has to be about collaboration. So for me, those are the three really key announcements of particular relevance to the accounting profession. And accountants within business can help set and achieve those goals. And then accountants who provide the assurance, who provide that business advice and support, can help their clients to avoid greenwashing. They can provide that robust challenge, ask the right questions, help organisations to really get it right in what can seem like quite a complicated landscape where you can have good intentions, make a bold commitment, and then get accused of greenwashing. So finding a way through that is key.
That's a really good point, because when an organisation makes a commitment, you don't want to then crucify them immediately for that ambition by saying, so now you've got to put this into the accounts, you've got to impair the assets and so on. But there's a trick there, isn't there, or a real kind of dilemma, which is when does that ambition start to have to get into the numbers? When does it become an obligation? When do we start doing that? I wonder.
You're listening to the ICAEW Insights in Focus podcast.
I'm going to come to transition in a minute, but I have one more question for you, because one of the things I thought was interesting in the run-up to COP was the Green Finance Roadmap that Treasury published and the sustainability disclosure requirements, and very clearly saying that the ISSB standard would be the backbone of what they did, but talking about going in beyond that by including impact. And I thought this was really interesting because, of course, your financial statements and your report is very good at capturing dependencies through risk, but doesn't really say a lot about impact. It doesn't, unless very, very closely, it doesn't really have a financial materiality. What's your take on that? I feel that's a really interesting opening of the door and goes to some of that greenwashing criticism that you're not talking about your impact as a business on society and environment. What's your take on that, Jessica?
I think it was a really important statement. And as you say, if you look at the detail of it, it was almost just a little aside in one of the paragraphs, but really important, really fundamental. So one of the key things with this ISSB, the International Sustainability Standards Board, is they've said they're going to focus on enterprise value. So more how might something like climate change impact the organisation? But of course, the flip side of that is organisations, through their emissions, through their activities, impact others. And it's that impact on the outside world that is at the heart of that additional element to the report that the Treasury has said, and the indication in terms of that reporting. Now, for me, that's actually where organisations have been focusing for a long time. So in some sense, that's potentially the easier bit to be reporting on, because for many organisations, that's how they've been thinking about sustainability for a long time. It's been more about their role in society, how they contribute to the communities around them. And certainly when it comes to climate change, everything is very interconnected. So it doesn't really make a lot of sense to be looking just at how things are going to impact you as an organisation. That's important. But most investors, certainly most stakeholders, so whether it's your employees or your customers, are really asking also what's your greenhouse gas footprint? Are you taking steps to reduce it? Are there ways to collaborate to make that reduction faster? And that's the question that people are asking. It's not just about, how is your business going to thrive and continue to survive in this changing world as we accelerate that transition to net zero. And then, of course, on the physical risk side, something we haven't really talked about. How are you making sure that you are resilient, that you aren't going to be impacted by the growing physical impacts from climate change, which Mark touched on when he was talking earlier.
Yeah. So just very quickly, the impact piece really interests me because, in a way, with climate, the impact is kind of captured through your emissions. But it'll be interesting to see what the detail of the guidance is around the roadmap. But Mark, just with an eye on COP15 next year, and COP15 is the Conference of Parties on Biological Diversity, so nature. That's going to be really hard, isn't it, for a business if they are suddenly beginning to think about, well, what's my impact on biodiversity loss?
Yes and no. As always, I think just coming back to what Jessica was saying, I think there is an internationally accepted framework already for measuring your impact on natural, social, and human capital. There's protocols out there. We're actually standardizing those pathways at the moment. There's several projects we're involved in. We're actually being very clear about what you measure, how you value it, how you convert that. So it is possible to do, and we've got hundreds and hundreds of case studies now of people doing it. So as Jessica was saying, it is possible to do. You're right, though, when we start looking at climate, most of the focus is on that. When we start moving to biodiversity, and the climate COP is actually quite sexy, to be honest. There's lots of, high-profile people there and all of that. The biodiversity COP, you don't get the same sort of people turning up. It's a lot more scientists, a lot more in-depth into the environment, etc. But there is already a post-COP agenda being placed. In January, there will be meetings in Switzerland. Then we'll have the main meeting coming up in China a bit later in the year. And within that, this whole idea of value is in there. It does connect very much into what we've been talking about at the climate COP. So there are connections between these that are already being laid. I'd hope to see that a lot of the nature people that turned up at the climate COP, we have some of the climate people turning up at the nature COP and seeing those connections. Yes, biodiversity is more complex, but don't get drowned by that, because there is a lot of work going on. There's been a lot of metrics done. We've got an Align project at the moment, which is consolidating all of those into very clear guidance. There's consultations and work you can get involved with. I think within the next year or two, particularly after this COP, the biodiversity COP, you will start being able to see much clearer routes that businesses can take to do this.
Yeah, so there's a big message there out for our members around engagement beyond climate change, isn't there? And we at ICAEW and the Countering Sustainability, of course, were big, and still are big supporters of the Capitals Coalition. So there's a big message for members out there to get involved in what the Capitals Coalition's doing and start to step beyond climate and to engage in the loss of nature. I just want to sort of start thinking about the future. And Kate, coming back to you, everybody's got to will have a different transition pathway, and every country will. But the next couple of years or 3 years are going to be critical in terms of really getting towards the 1.5 and to stabilising the situation. And part of that, of course, is going to be unlocking the money from the OECD nations to help finance those transitions. And of course, the more we kick the can down the road, the more violent the impacts are. Are we going to make it, do you think?
Well, I certainly hope we're going to make it. I mean, in terms of mobilising that finance, there are a great number of tools being brought into play. A lot of them have been discussed already. As I said earlier, previously COP discussions around finance have focused very specifically on some of the financial issues that hold up the climate negotiations, particularly climate support to poorer countries and this important 100 billion figure, What we saw at this COP was a much broader discussion of finance, which really took in world leaders, took in finance ministers, and really looked at ways to mobilise trillions, to use public finance and public signals to mobilise private finance at scale. It feels that we're in a very different conversation on finance, but I think that bigger conversation is just beginning. You alluded to it a little bit earlier with the discussion about how this plays into trade and broader conversations. We saw this COP immediately follow the G20 leaders meeting, and the one flowed very much into the other because this is now a top-tier issue in terms of international finance and economic decisions. Certainly at E3G, we're expecting to be following a whole series of financial system reforms over the next few years that might touch on banking regulation, might touch on how you define a green investment. We're really anticipating that in many ways sort of the rules of the financial system will be somewhat rewritten to integrate these issues, not only for climate, but also for other sustainability issues.
So we had a perfect storm, really, a good perfect storm of Italy chairing the G20, the UK chairing the G7, and both chairing COP, which perhaps triggered something. Do you think that there is a sort of game change here in the sense that what happened at COP is now going to really inform some of those political arenas, or much more focused on the economy perhaps, and actually this process is, say, kind of greening the G20 and greening the G7 and those sorts of debates?
I think it will definitely have an important role in doing that, yes. I mean, what happened this year, one of the things that happened was that the G20 came back in terms of really dealing with climate and addressing sustainable finance as part of that. Of course, a lot of that was very much to do with the change in the US administration. We saw the reinstatement of something called the Sustainable Finance Working Group, where countries, get together to address some of these issues at that level. We saw the US and China jointly chairing that group, which was a very important signal. And we do expect to see that going into next year. Next year, we'll have Germany leading the G7. And of course, the new coalition agreement they've just put together is very important for how they will deal with that. But, we're seeing a strong role for the Greens in their government. So I think we can expect a fairly green German presidency. We've also got Indonesia chairing the G20. And I think from them, we can expect to see a desire to continue working on sustainable finance, but very likely much more focus, as if there wasn't focus before, on the needs of emerging and developing countries, especially in the context of all the economic impacts of the COVID pandemic. So I would expect to see the focus shift a little bit more in that direction next year. But I think that's what we need anyway after the COP that we've just had.
And I suppose it kind of feels that markets by themselves aren't going to solve this. And the idea of disinvestment in hydrocarbons at the moment just feels a little bit like moving stuff around on a chessboard, that you're actually just swapping ownership rather than disinvestment happening. Do you think we might see, having seen the G7 talk about a global business tax, do you think we might see a realistic prospect of a carbon tax, a global carbon tax?
So I think we are very close to seeing the end of coal. And I think we saw some really interesting signals around oil and gas coming out of this last COP as well. And several different alliances of countries talking about removing public finance from that or ceasing to invest in their own oil and gas fields. So that conversation is definitely starting internationally. And there has been a great focus on how robustly and how quickly the world can decarbonise. That's what's played into all these discussions around greenwashing as well. But it's equally important to work out how to scale up investment into the green industries and technologies and companies of the future, and how to scale up public finance. And in that context, where governments lose their tax base from fossil fuels, yes, they do need to replace it with something else. The issue of carbon pricing, has been under discussion for a long time, and economically, it does make a lot of sense. It's not necessarily the most sustainable long-term way to raise your tax revenue, of course, because if we're trying to phase out these higher carbon activities, that carbon tax will go down over time. So governments will have to find other fiscal solutions as well. Yeah,
true. And some of them possibly very unpopular. So can we picture a day when we're taxing electric cars, for instance? That would be interesting, wouldn't it? So we've got a huge head of steam in a sense of lots of ambition and promises across government and the business world. But how do we turn that ambition into action? What's your sense, Kate, of the actions? What are we looking for from government? We touched on it a bit, but what do you think? What do you think the markets need from government?
So governments have, on the whole, done a good job of setting the long-term signals. All the major economies now have net zero commitments for 2050. But just like companies, the scrutiny is now on whether they really mean it, whether they're really putting their money where their mouth is. And that applies in the UK as well as to anywhere else. I mean, it was widely noted that in the autumn budget, climate change was barely mentioned, for example. So we really need to see that public finance and public investment showing that the UK is serious about its plans and that it has a credible plan going forwards, and that the plans it's expecting all the private sector companies to make are set in that context of a national collective effort.
Yeah, that's true. Jessica, just thinking about, so we've had a huge array of statements around transition reporting, around sustainability disclosure requirements, around the foundation of the ISSB. Is this sufficient? Do you think? What more does the profession need? What perhaps does it need from us as its professional bodies in order to start playing its part? We talk about a big role, but how do we get there? How do we enable that?
I'd agree with Kate that government has a key role to play in setting that level playing field. It makes it much easier for people to take action where it is within that base, that foundation, that makes action the easy thing, the obvious thing to do, rather than one where you're having to sort of step out of line with what your competitors might be doing or some of those kind of concerns. That said, I think that there is a huge amount that people are already doing and a huge number of opportunities in really moving ahead. And it's clear, as Kate was saying, what the direction of travel is. So those organisations that are really taking some of those earlier steps, and indeed have been for a number of years, will be in a much better position. So one of the themes is, how do you turn that commitment to action? And in terms of the actions, there is a lot that the accounting profession has already done. But I think in the next couple of years, that capacity building, how do you really get the right kind of skills as an accountant, within the accounting profession, to enable action to be taken is really key. And thinking through all of the different areas that the profession covers. So whether that is in the tax area, how do you make sure that you can tap into those incentives or get involved in some of the policy discussions to help inform what is going to make action the easy thing to do? How can you leverage your skills in that professional audit area to support organisations to make sure that investors really feel confidence in the information that they've had? If you're a management accountant, how are you really helping your organisation to put in place those strategies to work through the budgeting? Potentially think about tools like an internal price of carbon. I'd agree getting to a global price is going to be potentially hard, but often organisations have set those carbon goals so they can have a carbon budget. It's leveraging a lot of the skills that accountants have. In terms of ICAEW, and this is something that A4S and ICAEW have done a lot of together, is that upskilling. So is the qualification, when you're doing your learning at the start of your career, is it really giving you some of the tools, the knowledge, the skills to really be able to provide that kind of support to businesses and other organisations? And then, of course, for many, during their career, that continuous professional development and learning, is the information there so that accountants really can play their role. You know, the profession and accountants really have that reputation of being, one where you have real integrity. There's that public good element, I think, to the role of an accountant. It's definitely one of the professions that is seen as upstanding within communities. So how can accountants really tap into that role and what comes with being an accountant and being a member of a professional accounting body? And then how can ICAEW really help accountants to play that role? That capacity gap, that knowledge gap is really there across all professions. So I think it needs real collective effort to help upskill everyone to be able to respond. We know that we need action in the very near term. So how do we accelerate that? Where we find some of those solutions? How do we really disseminate that and help others, whether it's through case studies, examples, courses, online learning, workshops? There's a whole raft of actions that we can be taken.
And to your point about, it's not just the accountants, there's a whole host of different professions across the economy. Of course, it's something E3G have been leading on bringing together to say, well, what's the interconnection there? Mark, we were just touched upon is that we can't think about climate action in isolation, and there's a far bigger crisis that involves both people and nature loss. And that requires us to stop doing things the way we're doing them, doesn't it? I mean, we can't just do it better. We've got to change the way we do things. And that's kind of core to the coalition's ambition, isn't it? How hopeful are you because that's quite seismic, isn't it, that sort of transformation? How hopeful are you that we can do that within the time we've got?
I think the key thing here is that the decisions that we're making are based on the information we have in front of us. And most of the time, even under the conceptual framework of the IFRS, it's meant to be useful and relevant. And I would argue most of the time that information is neither useful nor relevant. What it does is it gives us a lot of the time, particularly in the sustainability space, some numbers. It will tell us 1,000 tons of this, 1,000 cubic meters of this. And then all we can do is use a benchmark or something to compare it. But it doesn't really tell us what the impact or the dependency of that information is. What we're finding is if you provide that information in a way that provides that context. So instead of 1,000 tons of carbon being produced, what does that actually mean in society? And carbon prices and things are a way of doing that. One way. There's other ways. You can look at the costs to health. You can look at the costs in society. You can look at the benefits that might be created by an intervention. If you start doing it in that way, it becomes useful information for decision making. As soon as you've got that useful information in front of you, we find it's very rare that people don't act on it. So actually, I think it's actually an information problem is a lot of this. And it's not that there's not enough information out there, it's that it's not flowing through the system. That actually the information that business has is not flowing through to the financial markets. Financial markets are not producing the right sort of information that can go through into legislation and regulation. So we need to see this all connecting up with a common sense of value. What do we mean by value? If that information is useful, then we can start acting on it. And then I'm hopeful if we can get to that point. I think there's a couple of other bits just to bring in here. I think that definitely agree with Jessica with the profession at the moment. They have a lot of the skills. It's the knowledge we need to keep on building up. And I think there's a lot going on there. There's an awful lot of jobs. If you want a good job at the moment, get involved in this space. You'll see your career jumping massively. We've got lots of young accountants and professionals coming to us and saying, I've got something that can help me with my career here if I can get my head around this. I think there's also the audit piece of this is very important. We're seeing now a lot of people starting to do assessments, starting to do an understanding of what the climate, what the natural capital and social and human capital impacts and dependencies are, and wanting to make sure they've got robust data behind that. So we need a look again at what the audit practice is and how do we actually assure and have an accountability system that brings all of the players together about what is good and what is not. And there's a lot of work also that we're involved in at the moment trying to look at that.
So we're nearly at time, and I thought it'd be interesting just to go round each of you and see what are the one or two things that you would like to see in place before we get to the next COP in Sharm el-Sheikh.
Well, I'd like to see more progress being made on the early conversations that started at COP26 about how to really bring public and private finance together and mobilise those trillions, because that's the signal that countries around the world and companies are really looking for in terms of how to scale up the green investment that we need, as well as the decarbonisation.
Two things. One, governments have committed to really revisit the plans that they've already got and this focus on 2030. So going into Egypt next year, how are governments going to be raising the bar in terms of the level of ambition to increase towards the reductions that are going to be needed to keep below 1.5 degrees? So that was one of the key outcomes, is how do we keep on ratcheting up the level of ambition and bring forward those targets to say, what's that interim milestone to 2030? Because we know 2050 is far too far into the future. So what's that interim 2030 milestone? And I think that focus is relevant for governments, but it's also relevant for business. So what are the actions that business is taking, having made a lot of these big commitments, really focusing on making sure as a basic first starting point, if you don't already, have you got your base understanding of what your emissions are? Have you really worked out what some of those risks and the opportunities might be? And then really involving the accounting community in terms of putting in place the right kind of decision-making systems, the right kind of reporting and robust information disclosure to engage not just investors, but also stakeholders in that transition.
So for me, it would be more about that public-private interface. So I still feel at this COP that the business was in one area and governments were in another. And we need to see public and private working together at this. And when there are big statements from the public sector, we need to see business getting behind it straight away. So I think there's a lot more we can do about collaboration, which is actually, I think, one of the key things for the COP. I spent a lot of time sitting on the curbside with some of those people protesting, agreeing with them. I was then inside the halls, agreeing with people inside the halls. It wasn't as diverse, actually, on some of the views they had, but no one was listening to each other. So I think the main thing here is to actually build those collaborations that will help us to take this forward.
Wonderful, thank you. Well, that brings us to the end of our podcast, and it's for me to thank our wonderful panellists, Kate Levick, Mark Goff and Jessica Fries. Thank you so much. You've been listening to an ICAEW In Focus podcast. Thank you for your time and thank you for listening.
We hope you enjoyed this episode. If you want to hear more from ICAEW, subscribe on Apple Podcasts, Spotify, or wherever you get your podcasts.